All right, good morning, everybody. Mike Rains here with Remax Terrasol, helping people buy and sell residential real estate here in the Huntington Beach and the Orange County area immediately surrounding Huntington Beach. Today is Thursday, March 3rd, and the Fed has met and they raised rates. So not a shocker there, but wanted to be able to discuss what's that mean to the real estate market and what does that mean to you as a buyer or seller. And so today we're going to jump into our presentation here on that. So let me share my screen here and go for it. So with rising mortgage rates, what does that mean for you guys? So the Fed met. So what happened? What did they do? What are they going to keep doing? And how's that going to affect you as a buyer? That's really what I'm trying to bring to you today, because that at the end of the day is what matters. So today's rate that I talked to a couple mortgage brokers that I know this morning, wanting to find out, okay, what happened to the mortgage rates over the last couple of days, and then particularly what does that mean today? So today's actual rate is actually still a great rate. It's 3.75%. And just to give you some perspective on that, the historical average, that's only at just over 7%. So 3.75% is a fantastic rate. And but it's risen. So what's happened in leading up to this, we've seen a lot of market volatility, and that has people that fly out of the stock market when that happens, and they go into the bond market. And when you see an increase in that, the bonds prices go up and the yields come down. So earlier this week, before the Fed interest rate, we saw that the mortgage rates were actually drifting a little bit back down, but the market had priced in previously a Fed rate hike of a quarter point, and that's what happened. And so we saw some volatility happening prior to that, and so the interest rates had moved down before they moved back up. That's priced in. So we're going to see some continued Fed hikes for the rest of the year. There's probably at least 2 to 3 more. And so we want to find out, what does rising interest rates really mean for you as a buyer? So I have this chart here that has a monthly payment comparison. We'll just use nice round numbers at $1 million home purchase, 10% down. So we're talking about a $900,000 mortgage on that. And let me just slide out of the way here. So the scale slides over here. This says today at 3.1, and this is at the time of this printing. But today's rate is over here at 3.75. So we're going to look at what that means and how does that affect you. So you have the interest rate up top, and then on the left you have the monthly payment, the difference, the annual difference, and a 5-year difference of that. So when you're looking at a $900,000, let's pretend like 3.1 was that rate, and that was like 3 weeks ago. It wasn't that long ago. So for a monthly payment at $38.43, today is at $41.68. So the difference of that is $325 a month. And so over the year, it's $3,900 more. And over a 5-year difference, that's $19,500. And you'll see if it moves up to a quarter point higher at 4%, you're going to see it's $450 over that. So $454 of payment difference can make all the difference for some buyers. And we're going to see how that affects the scale of the market too. So the impact of that rising, as we just saw, is 325 on a 900, 4168 per year. However, right now what we're experiencing is an unusual mix of low interest rate environment, and it's rising, but it's still a low interest rate environment. But we have a limited supply of available homes. So you've got all these buyers chasing just a few properties. And so the impact of that is really not being felt on the street. Not yet, at least. So today's rate may be higher than the start of the pandemic, because they had gotten down to a low. I had refinanced a house at 2.5%, 30-year fixed, and then we're talking today 3.75. So you're talking about a 1.25% rise from the low on that. So, but it's still, that's an extra $325. That's called a market adjustment fee at the moment. So but that's easily being absorbed by the market right now because of the limited supply of homes. It's because they're still flying off the shelf as they're coming on. You've got so many buyers chasing, they're waiting in lines. Every time I have a listing, I get lots of calls prior to me putting it on the market. And then once it goes on the market, the offers start coming in, and that's that buyer competition is what's driving up the prices, but it's also absorbing, even though there might be a buyer or two that with the rise of interest rate, that puts them a little bit out of the game. And that's going to happen later on this year as the market percent rises, as the bonds go up. I'm sorry, down, because people are going to come in and sell that bond because other opportunities will give them a better opportunity. So when the interest rates go up, that price of that bond is dropping. The other thing is also true: as people fly out of the stock market into safety, into the bonds, the prices go up of the bonds, and that pushes those yields down. So you want to watch the 10-year treasury to give an idea of what's happening with the interest rate. So, but with 10, 20, 30 offers coming in at a time, you have the sellers that are calling all the shots, at least in the immediate future here. And that's going to be price exceeding their asking price. Right now, the average across the United States is 100% of list price. That means some are sold higher, some are sold lower. The average is 100. And just to give you perspective of that, back about 3 years ago, it was about 97%. And prior to that, in other markets, 95%. So the question is, if you're a buyer, you're questioning yourself like, wow, rising interest rates, limited supply, should I still be buying? So here's a few things to consider if you're a buyer in today's market. Number one, if you're not owning a home, you're probably renting a home if you're not staying with somebody else. But rents have been rising. They've been rising steadily for the last 5 or 6 years. They're up 30% from where they were, and it's expected to raise another 4 to 6% again this year. So that's one factor. The other factor is the average homeowner. When you look at it, the wealth of a homeowner is far exceeding that of a renter. So people that want to build wealth in their life, they're homeowners, they're investment property owners, they like real estate, and so should you. The average American gained $56,700 across the nation. And here in Orange County, in this area, I'm in Huntington Beach, that's even higher for those that live in the Orange County area. So my saying is that you're either building your own dream or you're building someone else's dream. So that's the renter versus buyer. So I hope that helps you out. If you ever have any questions, I'm always available to answer that. And I'd love to be your realtor if you're considering a move to the Huntington Beach or the Orange County area. I'd love to be able to work with you. Shoot me a comment down below. Text me, call me. My number's on the front screen of this presentation. I'd love to be able to help you out. And if you like this content, please consider just hitting that subscribe button, subscribe to the channel, and also hit the like button. And I would really appreciate that. All right. Have a great day. We'll talk to you soon.